The Biden administration has just made it more expensive for well-qualified homebuyers to get a mortgage. Well-qualified homebuyers will now be charged additional fees in order to help subsidize mortgages for more poorly qualified homebuyers. In this video, I'll tell you everything you need to know, as well as how it will impact you and how big of a deal these fees actually are. So make sure to watch until the end. The first thing you need to know is the higher your credit score, the higher the fees. But it's not just extremely high credit borrowers. If your credit score is above a 680, then you're going to be getting additional fees. And this is true whether you're buying a home or if you're refinancing, and all of this begins on May 1st, 2023. In addition to credit score, putting a large down payment of 15 to 20% down also means you get hit with an additional fee increase. However, for those of you with a FICO below a 679, your fees just went down, so congrats to you. Everyone knows the worse your credit is, the more fees you get charged when borrowing money. That's because your loan is riskier. When you have bad credit, it just means you haven't been able to prove yet that you're a responsible borrower. So you get charged fees as an insurance to the lender since you're more likely to default on your loan. Makes sense, right? So why are highly qualified borrowers being forced to subsidize lower credit borrowers? Well, the Federal Housing Finance Agency Director, Sandra L. Thompson, who was appointed by Joe Biden, called it another step to ensure that Fannie Mae and Freddie Mac advance their mission of facilitating equitable and sustainable access to homeownership. This decision could not have come at a worse time, as the housing market has already been struggling due to these incredibly high interest rates. But how big of a deal is this fee actually? Well, someone approved for a $400,000 loan at a 6% interest rate would now be paying about $40 a month more, which might not sound like much. But what that means practically is you can now only afford $10,000 less of a mortgage than before. So if you were approved for a maximum loan of $400,000 and now you're hit with this $40 a month fee, then you'll now only be approved for a $390,000 loan. That's because every $10K you borrow in a loan costs about $40 a month. So if the home you want is actually $400K, this fee now makes it so that you're only approved for $390K, which means if you still want to buy that $400K home, you now have to come up with $10,000 cash out of pocket. So $40 a month may not seem like much on paper, but when it comes to housing affordability, which is the big issue for home buyers right now, it's actually a pretty big deal. So what do you guys think about this? Should well-qualified buyers be charged fees in order to subsidize lower qualified buyers? What do you think will be the result of helping more poorly qualified buyers purchase homes? Could this potentially lead to a rise in foreclosures in the future? What do you think will happen as a result of this change in fees? I'd love to hear your thoughts in the comments below. The last thing I want to say, and I always tell my home buyers this, and it becomes more true every single year. Time is not your friend when it comes to buying a home. Don't wait for anything. If you can buy a home today, buy a home today. You never know where fees will go, where interest rates will go, what housing supply will do, when COVID will hit. You just don't know. Work with what you know today and buy as soon as you can, because there really is no guarantee that you're going to be able to buy in the future. If you're new to this channel, thank you so much for watching. Make sure to subscribe so you don't miss the next one. Thanks for watching, and I'll see you in the next video.